Hi, Cecil Robles here from SniperFX.com. I wanted to take a brief moment and just talk about the kind of patience that's often overlooked by traders that's needed to trade uh, the markets, especially the foreign exchange market. Although at times we do have very swift moving moves or swift moving price action, like we see on this chart here. We can see that we have this is on the daily chart, dollar chief, and we have a very strong, uh, pretty much fast moving downtrend here. And at this point here, this downtrend then reverses. We have a nice candlestick pattern here, which is showing us a potential reversal in this particular downtrend. This has been, or at least a stall in this particular downtrend for a potential swing to the upside. And this occurred right at around 99.79 right there, or 99.80. That was the point that we had a potential signal at 99.80. And then you'll notice what happens. Price does actually reverse at that point, and it trades up higher, and it actually hits a high up here of 102.50. Now, if I back out of this chart a little bit, we'll be able to see a little more of what's taking place. And at that point, at 102.50, it stalls out to the high side, and what happens? It goes down, and we actually have a fall back down from 102.50 to a low down here of around 99 or 98.80, around that area. And many times, what will happen is a trader will get into this particular move, and they'll buy here. They'll buy at the right point, and it'll go up, and they'll say, well, it's going to keep going up, and they won't take profits. And then as it comes back down, and now they're below their entry point, what will happen many times is they'll say, oh, well, this is going to continue to go down and follow this trend, so I might as well get out here with a loss. And that's often the wrong thing to do, because the market moves in waves. It doesn't move in straight lines. Very rarely do you see price just go from point A to point B in a very straight line. You're often going to see this kind of price action, especially after a large trend. Here you can see that this was just an upswing in this downtrend. This is still a downtrend. It's been a downtrend for quite some time here, and you have upswings here in the downtrend. But this is a major trend in the dollar chief. Dollar's getting weaker against the chief, and you'll see these upswings that occur. And where these upswings go is towards our yellow line, and these occur several times. And now we're heading back up towards that area again. And so what will happen is that they'll get out at this point, and then you'll see what happens. We go actually into what we call a counter trend or sideways market, and this often occurs after a large trend. You'll see this kind of sideways market at the end of a trend when we have this kind of candlestick pattern right here. And so taking that buy signal and, saying that this thing's going to run forever and not taking any profits, which particularly we didn't really have any indication to take profits at this point, other than we were up a couple hundred, about 280 pips at that point, which is not a bad move whatsoever, especially after, a long downtrend here. However, the system, the Sniper FX system, really didn't give us any indication to get out, and so we continue to follow it right along, and we're continuing to follow it right along. And you'll notice what happens here. We have this candle that spikes up, and that gives us another opportunity to enter back at this old high price. What happens after that? Well, because we're in a counter trend market, we're going against the direction of the major trend, you're not going to see the fast movement. But what happens is price comes back down again and retraces. And a lot of traders at this point, after you've taken this trade up here, and now you're over 250 pips down at this point, which isn't our stop level. But once you're at that point, and once again, we're trading this at lower margins, so it's not like 250 pips at a 3% or 5% margin or something crazy like that. we're trading this in our comfort zone, where we're not risking extreme amounts on any one trade, but we're leaving ourselves open to gain more profits. And so we actually had this come down. It closed down here, and then the very next candle it shot back up. And then yesterday we had a very nice candle here, which actually gave us another entry point at about this area here. And now we're at 103.92. And if I just pull this back here, you'll notice our yellow line up here. And what happens when price goes up to that yellow line, you'll see that in these swings, when we have the same type of chart pattern here, in these swings we'll often have price go back up to that yellow line in this downtrend. And so that gives us a profit opportunity. So through this whole time, we've been holding this trade because we haven't had any signal to get out. So this has been quite a holding period here on this trade. But from our first position now, from 99.79, we're actually up from we're at right now at 103.92, and we got in at around 99.80, and that's going to give us a total right now of about 412 pips profit on the first position. And then getting in on the second position at 102.50, we've got about a close to 150 pips profit on this second position. And then again at 102.95, that's about 100 pips profit. So all total, we had 412 on the first one, 150 on the second one, and now about 100 on the third. Total, we have 662 pips of profit in this particular trade, and we're shooting for a target somewhere around 104.50 to between 104.50 and 105. And we'll see if price gets there prior to that. If not, we may get some type of a reversal very close to that area. We're actually only about 50 to 100 pips away of taking profit on all of these trades. So at that point, we're going to have another 300 pips of profit if that actually occurs, giving us, because we have 3 positions on this, giving us a total of 992 pips. 992 pips of actual profit in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 3, 4, 5, 6, 7, 8, 9. So about 30 days of trading, and this we may end up getting a profit signal today. Remember, it's only got to go up another 50 to 100 pips. So even at just the 50 pips, we're still looking at another 150 pips profit on that 662 pip number. So that's going to give us about 812 pips. Right now, just at 600 and I think it was 662, that's still, even if we took profits right here, that's not a bad profit target. So my whole point in showing you this is that sometimes it takes a little patience to let a trade pan out instead of getting very anxious. This is the daily chart, so these are day bars or day candles here, and it takes time to develop. Sometimes you do have these good breakout trades like this where you're able to catch 1,000 pips in a very short period of time. For instance, in this example right here, that's exactly what we did. We had a sell signal somewhere around here at 106.93, and we actually didn't have a take profit until 99.79 or 99.80, and so that's going to give us about 700 pips total there, and that's a great trade. So my whole point is that sometimes you just have to be a little patient and let the trade pan out. So let's see what happens today in this particular market. We're shooting for about between 104.50 and 105. 00 on the dollar chief to take our profits, and at that point we're going to get anywhere between 880 pips and 990 pips. So you can't beat that. And that's basically how our Sniper FX methodology works. It allows us to trade through these sideways markets, through these counter trending markets, and it also allows us to catch the breakouts and the trend. Here's a breakout, here was a reversal, here was a trend, and we were able to trade all of these markets. So that's the power of the Sniper FX system. And if you'd like to learn more about it, you can go to www.sniperfx.com.